Two words you don't hear very often in the same sentence are Infosys and tax evasion. But this has happened.
IT major Infosys is being investigated by the Directorate General of GST Intelligence for alleged evasion of integrated goods and services tax amounting to 32,403 crores.
Now, Infosys is facing a demand from the DGGI and the Karnataka state GST authorities for tax evasion for the period from July of 2017 to 2021-22.
It has been confirmed by Infosys itself that they received a pre-show cause notice for payment of GST dues worth 32,403 crore rupees from the Karnataka state GST authorities. Separately, they've also received pre-show cause notice from Director General of GST Intelligence.
This isn't the first time that Infosys has fallen foul of the GST department, though. But what makes it different is the scale of this investigation. It pretty much dwarfs the earlier issue when in April, the company said the Odisha GST authority imposed a penalty of 1.46 lakh rupees for availing ineligible input tax credit. Infosys has defended itself, citing a government circular to show it isn't liable to pay any GST on the services. But what is it that the DGGI has found? What does Infosys have to say? How much of an impact could this have on the company? What happens next? Will it progress to a case report or a visit from a DGGI official? Should other large IT firms be worried about this too?
To uncover all these details, we have with us ET Prime's ace reporters Joshelle Mendonca and Manu Toms. We also have with us tax veteran Ketan Dalal.
It's Friday, August 2nd. I'm your host, Diya Rekhi, and you are listening to Taxing Times for Infosys, only on the morning brief from the Economic Times. My fellow TMBN, Anirban, sat down with Joshelle and Manu after they put out that cracker of a story to find out more about what was written in that internal document that they managed to access and how it could affect Infosys. Listen in.
Hi, Joshelle, Manu. Very warm welcome to the morning brief. So glad you could make time.
Thank you, Anirban. Great to be back.
Great to be here.
So coming to you, Joshelle, as someone who's been covering tech for so long, what was your reaction when Manu sent you this? And this was clearly a story.
I mean, I think it was just that the number was so staggering, right? 32,000 crores is like close to $4 billion. And that's like a quarter's revenue. I mean, it's just the sheer fact that, the GST department has come out and said, we need $4 billion from you. And it wasn't even $4 billion till the latest financial year, right? It was still 2022. So then once you include these two plus 2 financial years, this number would have gone even higher. So it was just that the number was mind-boggling. There has never been a number like this in a tax demand against an IT company before.
See, generally, by and large, Infosys has got a decent track record when it comes to compliance. And that's one of the things which founder Mr. Murthy has always been highlighting. So therefore, this makes it all the more curious.
Got it. Why don't both of you explain the pre-show cause notice to me? Joshelle?
So how it works is that, this is an entire department that investigates GST evasion. It's called the Directorate General of GST Intelligence. And they have their own officers, like tax sleuths, who go out and, examine and investigate cases of GST invasion. And what happened on the 30th of July was that the DGGI put out an incident report. It's an internal report to the DGGI. What happens then is the next step is then, the DGGI also tells the company that we are doing this. This is pre-show cause, before an actual show cause notice. Then the DGGI will take the investigation further. There will be a case report. They will ask the company for information. They will summon a director. So it hasn't reached that stage yet. This is still very much in the investigation phase.
Coming to you, Manu.
Yeah, so this is, as far as I understand, it's more of an intimation that, look, here is an investigation and this is what we have found. But once it becomes a notice, then the whole thing changes. So the argument that's put forward by the taxman, if that's sustained, so that would mean 100% penalty of the alleged tax evasion.
So, Joshel, this has created quite a furor in the IT industry, and as you rightly said, a number of such huge proportions hasn't come to light yet. So, first of all, what is Infosys saying?
So Infosys, put out a statement saying that they were completely in compliance with state and central GST. Interestingly, their statement also said that not only had they gotten this investigation report from the DGGI, they had also gotten this demand from the Karnataka State Tax Department. So clearly, two investigations. So they've gotten two notices around the same money, around this same issue. So Infosys actually quoted a circular that was published in June stating that this issue, this reverse charge mechanism on overseas branches is not subject to GST. So this notice from the DGGI is basically totally baseless.
Got it. And what's the rest of the industry saying?
So NASSCOM put out a statement as well, and NASSCOM's been pretty clear about it. NASSCOM has actually been working with the government to sort of solve these tax issues for the Indian IT industry because there have been a slew of them. Before GST, there were a bunch of service tax cases, that were constantly being filed and appealed, and now we are seeing these issues start with the GST. So NASSCOM has come out and said that these sorts of issues impact how India is perceived as a place to do business, and that the finance ministry needs to come out and make it clear that the Central Board of Indirect Taxes has itself said that this is not a GST issue. But the fact that the circular has simply not apparently reached all the offices or all the officers, so these notices are still going on. Interestingly, the NASSCOM statement also says that the GST enforcement authorities have been issuing notices to other IT companies as well.
Right, right. I think there's something I read that which said that Karnataka High Court stayed a similar sort of claim against L&T Mindtree for 3,000 crore of taxes. Okay.
Yeah, so there have been a slew of these cases. I mean, when we had service tax, the tax department had also gone, after IBM in 2013, claiming that it had underreported its export income, and in 2013, the tax department was seeking over 5,000 crores. So when IBM received this demand, it was not the only company. Infosys, Wipro, all of them had received the service tax demands back then, and now we are seeing this case with the GST demands again come. And this is what NASSCOM has been trying to work with the government for, to try and streamline this process, because it shouldn't be this adversarial where where the tax department states a demand and it becomes this long process where the entire industry is up in arms.
So Manu, is there a precedent to such a huge proportion of, let's say, unpaid taxes in any segment of any industry?
Yeah, one that obviously comes to the mind is the Vodafone tax case, which is now 12 years old, when the then finance minister Pranab Mukherjee pursued Vodafone for 20,300 crore income tax and the controversial effective amendment of income tax rules, etc. It was widely discussed. It was seen as something that could have a huge impact on the entire business climate. The same way, this astronomical figure can have serious ramifications on the business and probably for the IT industry and especially for this company. So therefore, this attracts huge attention.
Yeah, the problem is the reputational damage. I don't think anyone in the industry believes that this demand will be upheld. Infosys' shares only fell 1%. If investors were taking it seriously, then a 32,000 crore tax demand would result in a far more significant share price drop. But it's quite a reputation hit, because then if you type in Infosys, your top thing is tax evasion, and that's not a good look for any company.
Next, Anirban spoke to tax veteran Ketan Dalal, who broke down what the implications of this whole debacle could mean for Infosys.
Mr. Dalal, very warm welcome to the morning brief. So glad you could make time.
Thank you, Anirban.
So first, I'll start by asking you, the main contention here, if we look at both the documents, the circular that Infosys is citing as well as the pre-show cause notice, the main contention seems to be that Infosys and its overseas establishments which are supplying services to it should be treated as distinct persons. Now, why? Please explain to me, sir, what does that mean and how does it lead to accumulation of taxes?
So, many software companies and Infosys also, in some operate through branches in foreign countries. Some operate as subsidiaries. Now, if it's a subsidiary, it's anyway a separate person because it's a separate corporate entity. But under the GST regulation, overseas branches are also considered as quote unquote, separate establishments, separate entities, and that is what it is referring to. And the technical reason is that if it is not a separate establishment, then the question of even GST arising at inception cannot arise because an entity cannot claim GST or cannot charge GST to itself.
And what are the other points of contention, sir?
The other point of contention is, see, what happens is that in many software companies, including this one, the sort of front end is either a subsidiary or a branch, in this particular case. So the branches are, fronting the relationship with the client. So in US, for example, which 70 to 75% of the business in most software is US. So I'm just taking a US example. So let's say a US branch will front end with the clients of the entity in the US. It will be the interface. It will, interact with the client in the US for any problems that the client may have. It sort of acts as the A for the marketing and getting the contract, and also a sort of communication link or a bridge, as it were, between the US client in my example and the Indian company, which is obviously operating out of India and where a lot of software is anyway being developed. So that is what the functions of a branch or a subsidiary, in this case, a branch. So that's what the functions are normally.
So now Infosys has cited a June 24th circular to say that if the recipient of the services, in this case, of course, Infosys, gets input tax credit and does not issue an invoice to the foreign establishment, in this case, its branch, the value of the services is nil, which also means obviously that it can't be taxable. But if that is the case, one would ask, how is one department sending a notice or investigating something that kind of goes against a circular that had just come, 2 months earlier?
Anirban, it is said that language is a imperfect expression of human thought. So it is not, it is actually the same department, it's part of the same GST authorities. But what happens is when a circular is issued, one can always interpret the language to say, oh, but I don't think it meant this, I don't think it meant that. So I think there is some gap in understanding here as I see it, because normally if a circular is there, it is supposed to be followed because it's the same department circular. But it means that they don't think the circular says what you and I think it says.
Okay. But does it sort of, open a can of worms? Because, we all know that IT services companies have overseas branches, they have clients, etc. And there are precedents of, tax authorities going, if they go after one IT company, they go after the others as well.
Yeah, let's say after reviewing further details, either of the same quantum or maybe of a much lesser quantum with some other interpretation, this turns into a show cause notice at a later stage. Then, yes, Anirban, as you mentioned, it could turn out to be an industry issue. And because so many IT companies have branches, I'm not sure whether they will extend the same logic to subsidiaries, but it could open a can of worms. And the problem with this kind of a can of worms is that once this kind of worms get out of the can, then who will put the worms back in the can becomes the question. Because, it sort of goes into some kind of a stratosphere, some system, and there's no single person who is willing to take the call of closing the issues. And of course, we all saw the NASSCOM strong statement. So I hope, first of all, that it will be withdrawn completely, either as a result of representations made, the kind of statement issued by ASCOM, and more importantly, on the technical correctness. I think from all those perspectives, it should be withdrawn. If it is not, yes, it could sort of keep going on as often things do. And that's not good for any stakeholder, in my view.
What are the 2 or 3 things that you would recommend that should be implemented to avoid any such confusion? And this has been a massive kind of confusion. How does one avoid these instances in the future?
I think one of the important things is to look at the intent. If the tax authorities look at the intent, then it probably will become much easier to administer the law. The second is relative clarity in drafting, both in terms of laws and in terms of circulars. And the third issue is that whenever there is a industry-wide issue, it is unlikely that a large industry like an IT industry will, so to speak, not pay GST on something which would have been payable. So I think sometimes these outlier stands are taken by tax authorities, and one hopes that the approach will change. I mean, we are in a very volatile and competitive world, and these kind of issues can drain enormous amount of management time and impact ease of doing business. So one hopes that this kind of perspective will be borne in mind, particularly for something which is an industry issue.
Got it. Thank you so much, Mr. Dalal. These were great insights. Thank you so much for joining us.
Thank you so much.
For context, Infosys informed the BSE that it had received a communication from the Karnataka state authorities withdrawing the pre-show cause notice. However, the authorities directed the company to submit any further responses to the DGGI in the matter. Margaret Mitchell, the author of Gone with the Wind, once said, and I quote, "Death, taxes, and childbirth. There's never any convenient time for any of them." End quote. We're sure Infosys would agree, because this possible tax payout hits Infosys just as the company and India's other major IT firms are showing slow signs of recovery following a slowdown in discretionary tech spending in key overseas markets. Like I mentioned earlier, the sum that the DGGI has asked for amounts to more than a full year's net profit of the company and about a quarter's worth of revenue. And while Infosys has categorically denied claims of tax evasion, now that they're very much on the taxman's radar, they likely will have to go through the DGGI's complete investigation. And as that happens, make sure to stay tuned as we bring you all the latest updates. Thank you, Joshel, Manu, and Ketan. It's Friday, August 2nd. I'm your host, Diya Rekhi, and you were listening to Taxing Times for Infosys, only on the Morning Brief from the Economic Times. This episode was produced by Surohini Jain and sound designed by Amrit Redji. We hope you liked this episode. If you did, please make sure to like, share, and subscribe to the Morning Brief. A new episode of the Morning Brief drops every Tuesday, Thursday, and Friday on a listening platform of your choice. Keep listening and have a good weekend. All external news clips used in this episode belong to their respective owners. Credits are mentioned in the description.